Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Market rundown. Checking in on the daily time frame, we had a bearish reaction to Netflix earnings, so the tech sector started weak this morning, but the bulls bought the dip to maintain the daily uptrends at this point. We're setting up for a very interesting week next week, and one that we're going to have to be paying attention to because I anticipate next week we're going to see some volatility. So we have two scenarios right now. First off, have the hourly trends changed? And I personally would consider that SPY has not changed the hourly trend. Well, it could go either way. You could say that this is a double bottom with pre-market levels, and then we broke resistance, so that's an hourly trend change. For me personally, I'd like to see a clear level of consolidation and then continuation for us to say, all right, this is our daily high or low, and we're headed back to the all-time high. So pretty much I need to see a break of 299.25 tomorrow. Then our new daily high or low will be 296.70. But why I am personally anticipating volatility to come, number one, the daily uptrend is getting tighter and tighter, meaning there's less and less space for pullbacks while still maintaining that uptrend. It is still intact, but we don't have nearly as much space as we did just a couple weeks ago. Number two is the VIX, which we'll look at here. Well, might as well just skip right to it while it's on topic. So again, the falling wedge for VIX here is definitely something that we need to be paying attention to because it is entirely possible that we see a significant break from this pattern sometime next week. So this is the pattern that I am watching as far as the tightening range goes, and this line's a little sloppy as far as resistance goes. You want to ensure that nothing is closing below that level, but you get the gist here. We have a tightening range. We did not break 1470. Now we have a lower high, and we're looking down at support down at 1230 and 12 even. And again, we're just going to look for this tightening range to break sometime next week. One more trading day this week, and then 5 more days. I certainly anticipate a break. So if it's going to be a bull break, I think a bull break's more likely than not. The reason being, this is a bullish pattern in the majority of the sense, but the S&P 500, if we keep grinding higher, I don't think it's going to lead to the VIX here seeing a significant bear break below this pattern. Maybe we drop back down and test 12 area again, and maybe even drop a little bit below it. But I don't think it'll be a significant break. If we're going to get a significant break, I think it'll be for the bulls, and I think it'll be marked by the S&P 500 losing the daily uptrend. So that's what we're watching. Now the market's starting to price in, this rate cut, and perhaps if the market, if we didn't get the rate cut, and the market has it anticipated as a more than likely scenario, more than 50% chance, that's when we would see a bit of a market reaction and a correction, in my opinion. So IWM and correction can be interpreted in many ways. Again, if we lose the daily uptrend, just zooming out to the weekly and looking for a weekly higher low. Tons of space for a weekly higher low to form. So IWM still fading with these little lower highs and lower lows. We finally broke bearish with no follow through from that range that we were within. Anything under 156.67 is just a lower high, keeping the bears in control, but basically just a lack of volatility. And I'm bored with IWM. I don't even trade it, but not really anything to gather from this chart as far as the market as a whole is concerned. So QQQ, the higher low is 188.65 for the bulls to hold. And we had a gap down open today, and the bulls bought that gap down open. Same thing though, we have not changed the hourly trend during regular trading, and if we turn off extended hours, we can see it was a V-shaped recovery, but we need the higher low and higher high into tomorrow. I'd be a bit cautious tomorrow if we start strong because these hourly charts do need consolidation. Very similar setup for QQQ and SPY. XLF, so we broke support by 3 pennies, and that's not convincing by any means. So we're going to consider that a double bottom, or I'm going to consider that a double bottom. And we're looking back up at the recent high of 28.35, and we're going to have to see a more clear bear break than that in order to be looking at a clear bear break. So we could call this a weekly bull flag trying to form. And again, when you lose daily uptrends or change trends and don't get a lot of follow through, that's when we zoom out and look for flags on longer term time frames. So we'll need a little bit more info, but so far so good as far as no reaction to that support breaking. And a break of 28.35 next week would be notably strong. Pretty much if we're going to see the VIX break bull and weakness, we're going to have to see SPY, QQQ, XLF all break their daily higher lows. Everybody's going to have to break those higher lows. XLV just held on to some short-term support. That low was 91.80. And again, we broke it by 6 pennies, but still holding this range of support. So hardly getting any significant bear breaks. And I consider these double bottoms because of their reaction. You know, if we closed at the low of the day, 4 cents under that support, we'd say, okay, well, we have to look for a follow through tomorrow. But such bullish reactions, just breaking supports by a couple pennies, you know, we're talking a fraction of a percent here. So that's a double bottom for me. But anything under 94.15 will just be a lower high on the daily time frame for XLV. So again, if VIX is going to break bull and we're going to see all these names lose their supports, we're going to have to see XLV break 91.50. That would be notable for me. Biotech sector, same thing. Broke support with no follow through. That support yesterday, we broke it by about 30 cents. Today, a big solid green day. Key resistance is 88.07. But an ideal scenario where we break support and get no follow through, and it's a potential weekly bull flag on the biotech sector. We certainly need more follow through than just one day. But when we drop to lower lows and don't get follow through, we zoom out and look for the potential of a flag. And then there's the VIX that we looked at. So tightening range to be watching. So before we get into commodities, how to be playing here, personally, still going with the bulls, still looking to buy dips. And when we lose these daily supports, that's when we get extra cautious. Or if we head into an event, perhaps a significant jobs report or economic data coming out, or of course the Fed that's upcoming, then we would look for potentially protecting ourselves as well. So whether you have a long-term bullish portfolio, maybe you take out some hedges against that, or if you know, there's 100 different ways to play it, but potentially entering some short positions. For me, I have to lose the daily uptrend before I'm looking short. And that's just a rule of thumb that's been a good guide for me here in 2019, and I'm going to stick with it as long as that is the case. So looking at gold, huge move for the miners today. Gold got its bull break, this equilibrium that we've been watching for a couple weeks at this point. Clear bull break over 1427, and it was nice and convincing to not only break that level, but break the high of 1439 at the same time as well. That makes it convincing. Continuation, anything on the daily chart over 1400 will be a higher low from here on out, keeping those bulls in full control. The breakout continues. Bull flag on the weekly is confirmed, and the bull miners who gave the early indication, again, we see this is yesterday's candlestick. This candlestick just rolled over. So this is yesterday, which is Wednesday, and this is what NUGT did yesterday. So clearly breaking out, huge follow through today, and currently still holding my swing. I'm only going to exit at this point, probably unless we see gold lose the daily uptrend, because that's been working really well. This is a trade. I'm not generally a swing trader, but holding this one now for 12 days certainly feels like forever for me. But the bottom line is here, such a small position is returning such significant gains, and it's up 50% at this point from my entry in the 24s. And I've traded a couple positions aside from that, but held that core. And again, it's a small position that's a fraction, 10%, 15% of a normal day trade flip position for me. But because it's such a longer term swing, such a longer term pattern that's following through that we want to be patient with, it's paying off in a big way, and it's giving me gains of what would be equivalent to a large position, giving me a week maker or more. Oil on the daily time frame, we broke support. So $56 support breaking. Surprised that the bears had enough momentum to go straight through that level. The 4-hour RSI right down to oversold. Just bear flag. Look how many bear flags we got. 1, 2, 3, maybe working on a fourth. And what's that done is just stair-step the RSI down. So we didn't even really get significantly oversold on the 4-hour until this last move down. And if you looked at that on the 12-hour, it's going to be a bit different. Much more beat up RSI. Well, not in terms of the number, but less. Let's try and find a time frame to point out what I was talking about. Just trying to find a time frame that hasn't had those little bounces cooling things off. But what we're looking for at this point is the monthly equilibrium. And I'm going to zoom in now and use it on the weekly time frame, but let's first look at the monthly. So our lower high has now convincingly been set at 60.91, and it's all about 60.91 to 50.59. So essentially a 20% range or so, and that is going to be key and important for oil and potentially for the effect on the market into the, I'd say, like I've been saying, Q4 2019. So our lower high on the weekly has been set, 60.91. I certainly would be surprised if we dropped straight down and broke 50.59. I think a weekly higher low is going to form before that. I think we're going to get a little bit of a bounce. That could play out into early August. And we may get a break. I was thinking maybe September, but it's looking like August is going to give us a break of this tightening range. I'd say August, at the end of August at the latest, unless the volatility really drops off. But this is going to be notable as far as this pattern has been in the making now for almost a year. It'll be about 10 or 11 months between the high, low, lower high, higher low, lower high. And this is what I anticipated the S&P 500 would do after the dump and the size of the bounce in December. And oil is doing exactly what was anticipated, huge volatility into a tightening range and equilibrium. S&P 500 obviously didn't do that. Natural gas, still trying to find support. Weekly time frame, still trying to change the trend. We need a higher low on the weekly to form. And essentially we need to bounce, set a daily lower high compared to 250, and then try and change this daily trend. Again, haven't even started that attempt, but it would have to look something like that as far as changing the daily trend, in my opinion, to try and form a weekly higher low. Or we could just drop right down back to 215 as the bears keep the weekly downtrend intact as they have been doing at this point for such a significant amount of time. So that's where we stand as we head into tomorrow. I appreciate you watching. We'll check back in over the weekend and see if the VIX is going to tighten further and see if the S&P 500 and all these other names can change those hourly trends bullish to make us convinced our daily higher lows have been established. Have a great rest of your night. See you soon. So another raised bed update. We've got two more, as you can see, the path that's coming together. Have to finish adding topsoil and manure to these guys, and then we're going to start on the next row. And we'll probably do the same thing where we pull out the path, put a bunch of mulch in the path, and then here we'll do the next row. And going to leave a diagonal from the corner of that bed where the wood's lined up and then to this tree to be able to have a grass path to walk along the pond, and then do more raised beds over here in this spot that's nicely in the sun right now. We planted the first fig trees. My buddy Casey got me these. There's two of them we put in this open space and we planted them together, so we'll see how these go over the next 5+ years. Doubt I'll get any fruit for the first 3 years. Patience.